Look at a business, the concept of, for 2 minutes, the concept of triple bottom line that I explained. As a responsible business, you need to create value not only to you, create value to the society, then you will be very successful business. So that purpose you need to understand two things. Again, extremely important concept that you are going to learn during next 5 minutes. Please write. What you are going to learn is 3 things. Please write: financial materiality, impact materiality from GRI, and double materiality from ESRS. That's what you are going to learn. Now there, like I said, look at practically every business. What you learn in integrated reporting, 6 capital, you can't make money only by having financial capital, you need natural capital. Now there, inside out, I want you to write this. Inside out. What is inside out? Business, impacting the society. Take the most simple example, you are not cleaning your wastewater and releasing. So it goes to a river, it's going to affect the ecosystem, right? So that business impact society, right? This is very much impact materiality, right? I think this is not working. And second one, is working. So note this carefully, impact materiality. Then inside out. How about outside in? IFRS is very keen on outside in. Why? Now imagine I'll take a very simple example, Coca-Cola or water bottles, right? I don't have water bottle now, plastic bottles. Now these water companies, they are mainly relying on water, even Coca-Cola, right? So water is critical. If you find that water scarcity, water is not available, the drinking water, they can't now directly, it will affect their cash flow. I said 3 things, right? Earlier, cash flow, access to, I said 2 things. Third thing I didn't say. The first thing is cash flow, access to finance, cost of capital. Now if you don't have water, you can't run. So IFRS is very keen on what? Outside in. Is there anything in the society or the environment which is going to impact your cash flow, your financials? So that is outside in. Outside in, right? External factors, and that is financial materiality in IFRS. But when it comes to now, then remember definition, financial materiality is from IFRS is anything that is going to affect your ability to create value. So water not available, now suddenly one of your suppliers stops supplying because that supplier cannot continue. There is a drought in that season. මං කියවන Emerson දැන් හිඳිලා කියලා newspaper එකේ write other paper. එතකොට not a laughing, not something to laugh, but these natural resources really impact in the business, and that IFRS is very keen because you can't create value. So that's financial impact materiality, popularly using GRI standards. The impact is they are very keen on how company is going to impact the society. Like my example of releasing wastewater, very simple example, right? So double materiality is about you are looking both impact and financial material, and that is the framework in Europe. Please write ESRS is focusing on double materiality. So now I can gain entry to IFRS S1 and S2. So IFRS family, IFRS standards are based on several other standards, by the way. IFRS cannot just develop S1. They have borrowed and married many other frameworks and standards. So mainly from IFRS perspective, the integrated reporting is now part of IFRS S1 and S2. I'll explain the connectivity. And SASB standard, Sustainability Accounting Standard Board, there are 77 industry specific standards. Now when we talk about S1, we talk about all those 77 standards. Don't worry, if you are in bank, or if you are in hotel, or if you are in apparel, you need to apply only that standard. There is an industry standard in SASB, and IFRS says if you want to identify SRRO, go to the SASB standard and identify, which means When you study S1, you need to also study about SASB standards and also CDSB. So these things helps you to identify. So these are more of investor standards, right? Whereas these GRI is a more of a stakeholder driven standard. So that's the alphabet soup. This is a soup, alphabet soup. You have ESG, TCFD, IS, OLA is a soup. So now when it comes to S1 and S2, important point is, remember, they haven't just developed this standard. They are borrowing from many other standards, especially this TCFD. Same principles have been used in IFRS S1 and S2, and also IFRS S1 and S2 recommends, like I said, use SASB, and also integrated reporting. If you are using, you can easily connect integrated reporting when you identify what? SRRO. So now we are going to the most essential part of our lecture, and that is to directly understand, based on the background knowledge that we have, SRRO, right? So the SASB standard also I will cover as we go through the S1 and S2. This I just want to emphasize, I already said at the start, the board of directors are mainly interested about this topic. Why? It is the duty of the board not just to make profit. Don't make profit by creating problem to people, right? Give part to the people and protect the planet, and that is a board responsibility. As the governance board has to see how targets are set to reduce emission, how emission is calculated, whether SRR risks are discussed at the board meeting, what is your strategy, short term, medium to long term, right, in terms of reducing the impact. Remember, I spoke about this word resilient. Your climate risk, how resilient you are, and then how you manage those risks, and how you measure your scope 1, 2, 3. So whenever we speak about S1 and S2, we speak about 4 things, that is governance, strategy, risk and metrics. Always those 4. This is considered as co-content of S1. Co-content. What is that? Co-content. What are the co-contents? Governance, strategy, risk management, targets and metrics, which we are going to discuss. Right? Because you have the basic knowledge. So GRI, I can speak another 2 hours, but be aware. Why? The examiner says you need to aware about different frameworks that are there. So only thing about GRI is, remember, the GRI is based on impact materiality. Whether your balance sheet is affected or not, anything as a company that you are doing, if it is going to impact the society, you need to be aware about it. So that is where GRI standards comes. So the GRI 1, 2, 3, these are general standards, especially this materiality. Material topics means significant topic. Now, there I will give you a good example you will never forget. Now I am asking you, if it is a bank, do you think water is a material topic for bank? Material means based on the business model, you are impacting water in a big way. Yes or no? No. But if it is a manufacturing company, or like I said, Coca-Cola or other beverage manufacturer, the water is a material topic, right? So like that, a company that has, say, apparel industry, many employees. So then child labor, forced labor, all these labor related topics are material. But right now there is no IFRS, there is only S1 and S2, labor related one will come in future, right? So but GRI has all of these material topics based on your business model. Are you going to impact the water, air, people, whatever? So you can, there are many topics. Out of those topics you need to figure out what are the, so I'll show you this slide. These are the topics, topic standards. So when you do a study based on your business model, you will tick off, for my company, I am a manufacturer, I am going to tick off, this is my materiality level, so I am generating a lot of waste. In my company there is a chance for anti-corruption, tax is a material sensitive topic, energy is definitely yes, and the emission is a relevant topic, environmental compliance, I employ many, the labor force is significant, forced labor, risk is there, occupational safety, non-discrimination, labor relations, right? So these things matters. So these topics like health and safety also matters. So now this is my material topic. So based on this, I am going to actually capture and quantify and measure and report based on GRI standards. So please write this word, GRI materiality assessment based on the topic standards, that you can do the materiality assessment. Before that you need to study your stakeholders, right? Who are your stakeholders? Because the stakeholders, the impact company is going to create. So now within 3 minutes, 4 minutes, you learn little bit but very big point about GRI standards. And because this discussion is not on GRI, but remember, according to the exam or even practically, most Sri Lankan companies follow GRI standards. Right. Then ESRS. තාම ඉවර නෑ list එක නේ. Right. So like that, like GRI, ESRS has gone more than IFRS, because IFRS has issued only one standard, S2. S1 is the foundation. Now what is the foundation? Governance strategy, risk management, that framework. Not only that, I'll cover during next, I said 1.5 hours, right? So maybe we have to go at least another half an hour, right? But that half an hour is the essence of this discussion, right? Now only you are going to score, your knowledge will go like this now. The ability to answer exam questions going to increase, right? So now this next half an hour you need to be very much attentive. So ESRS, don't worry, those are not going to be tested. But what I want to say, ESRS is again like GRI based on double materiality. What? Double materiality means, now do you know, inside out as well as outside in. You need to really understand this. What is inside out? Companies disturbing the society, right? Outside in, society's impact in your value creation. That is financial materiality. IFRS says sustainability related financial information, OSRRO, right? So that's about it. So ESRS has gone more. So they have climate change, pollution, water and marine resources, biodiversity. This is going to come in soon in IFRS. And human capital is another standard the IASB is working. Right, so these are